For today's idea, we start with first one with be a dagang net chain or DNEX. DNEX has been highlighted in our traders almanac earlier on 24 April. The stock has gained about 23%. And hitting I think still fell short to hit our second target, but regardless, the pullback over the past few days, seeing the stock has forming some sort of support right within 13-day moving average. So the high yellow structure still pretty much intact, and if you look on the trend for RSI, you can tell that overall momentum remain elevated. RSI continue to bounce off its long-term average line, and in fact continue to rise above days 50-point mark. We see a new uptick in the RSI line on the back of fresh bullish signal on stock price yesterday. We see a pickup in terms of the trading volume. The trend also start picking up again. So we are expecting this ongoing ongoing upcycle to continue unfold as we reiterate our technical buy with the new and higher target at 51 cent and 57.5 cent, with the cut loss has been revised higher to the 41.5 cent. In terms of risk to reward ratio, it was 1 to 2.5, which means 9% downside risk, again 25% upside potential. For today, only DNET have the quant scoring. We are using value with the scoring of 7.00. All right, the second stock will be Micron. The Micron has been consolidation within the triangle pattern for quite some time, particularly since November last year. Finally, those consolidation has ended following yesterday's solid breakout move. You also seen a gap up move on the back of high trading volume and positive reading in equally RSI and D trend. So this cycle has started to unfold. So we're expecting the uptrend to continue, with the net resistance is actually at 46.5 cent and 51 cent, with the cut loss below 37.5 cent. Risk to reward ratio is 1 to 2. 10% downside risk against 21% upside potential. There's no quant scoring for the stock. All right, last but not least will be Evergreen Fiberboard. So the reason why I highlight stock, despite I would say in terms of price movement, it will be much more slower pace. But we like the idea where the stock is actually has been taken out their medium-term downtrend line, which, or you can call it long-term downtrend line, that began since September last year. So this downtrend line has been taken out by yesterday's solid gain on the back of high trading volume. You are seeing the RSI has traded inside the overbought territory, which is a good signal given this the stock is pretty much inside the consolidation mode. So a break and overbought reading here tell you that the momentum is strong enough, try to push the stock out of the consolidation phase. So with those positive reading, we expecting the uptrend to continue, with the next resistance actually pegged at 37 cent and 42 cent, with the cut loss below 30 cent. So risk to reward ratio is 1 to 2.4, which means 10% downside risk against 25% upside potential. What do you think?